Welcome back to another edition of our market update video. Thank you for joining us, Tom. We have a CFA Charter Holder Day. It's a nice summer day, middle of June, but there's lots going on. So let's start at a broad macro level. Federal Reserve. We have a Federal Reserve meeting today and tomorrow. Press conference tomorrow afternoon. What are you going to be watching, Tom?
I think, it's sort of a new regime as far as it's a new Fed director. There's a lot of uncertainty and just sort of the cadence and some of the language used with this week's meeting compared to what we've gotten used to for the last several years. So I think with a lot of uncertainty coming into this, a lot of the focus is just going to be on that delta, the meeting over meeting change, and what are some of the differences, and should we be revising expectations of actual policy. We do not believe there will be any change to the actual Fed rate as we know it right now, but there could be revisions to expectations for the remainder of the year. As a reminder, we thought there could potentially be 1 to 2 rate cuts at the start of when we were at the start of 2026. That's kind of gone out the wayside, and I think if we had to make a call, it could actually be the opposite direction, where perhaps a hike is on the table. But we're really going to learn a lot more in a few hours than what we know right now.
Yeah, as it relates to rate cuts or rate increases, I continue to sit on the same fence where I was at the beginning of the year, expecting no real move in either direction and just watching the ball bounce back and forth, right? You mentioned looking for changes. A little more specifically, it'll be interesting to see the changes in the press release and the language that'll come out in the notes as well in a couple weeks. The press conference, I think, will be interesting too. It'll be his first press conference. What he said is expect less talk, maybe more action, but definitely less talk as it relates to maybe publishing dot plots and forward guidance and stuff like that. That'll be a bit of the markets will have to adjust to that if that's going to be the case, and that could be interesting as well. So definitely something worth keeping an eye on. It's the beginning of a new era. In terms of the Fed board. So keeping a close eye on that. One other thing that's been happening that's hard to not pay attention to, Tom, is a recent IPO launch on Friday.
I'm not sure I know what you're talking about.
We now have the sixth largest, I believe, as of this morning, market cap company. That has no bottom line earnings number, has revenue. Thoughts as we watch the stock price on this just sort of skyrocket?
I see what you did there. Here's what we know. This is more broadly speaking. It's not about any one specific company, but IPOs the last few years have been very few and far in between. There just has not been a large market for IPOs. A lot of companies were going the SPAC route. A lot of companies have been just staying private for longer. And I think that is one of the big shifts that investors need to understand, that more and more enterprise value and value creation for companies that eventually are going public, that value creation is increasingly being done while they are still private. So a lot of the money that is being made by investors is well before any of these companies enter the public exchanges, and that is a big shift than what we knew about IPOs in the 2000s and the 2010s and going back a little further. So yes, this is a lot of hype. The recent IPO that you're speaking about, Jeremiah, on Friday is probably only going to be the first of several other big IPOs this year. But I do think fundamentals do matter to an extent. And right now, when you tell me that particular companies are not actually making money, and a lot of the hype is around speculation about what it needs to do in the next 5 to 7 years. I think the biggest message for investors is proceed with caution. There are no certainties when you don't have a clear plan laid out in front of you.
Yeah, and this means a lot for broader markets too. You touched on the importance, and we've been talking about this for years, the importance of investing and being in the private markets, and the fact that the private markets continue to grow and grow gives you some more broad-based exposure to these types of exits. Now, you mentioned too, we haven't seen a lot of IPO activity over the last few years. And that's been challenging for private markets because that is one of the exit options. It's actually not one of the preferred exit options. They usually end up selling to other private companies, but this does give them a better sense of how the market is thinking in terms of valuations of companies, which translates to how they're able to hold valuations on their books and realize those returns within the private markets. And it does give them more appetite. Like you mentioned, we're going to see more of these big name IPOs throughout the rest of the year. This does give them another avenue to exit when the market conditions are conducive to that. I'll also suggest that if I'm a private market portfolio manager, if I'm taking a company public, I want to do it when valuations are above average or higher. So maybe this is also a signal to the public markets of maybe we're getting a little over our ski tips in terms of valuation metrics. So that's something to keep an eye on as well. What else are you watching, Tom? What else? Anything that you like in particular? Anxious about? The consumer seems to be pretty healthy. Gas prices are coming down a little bit. That's going to feel a little bit better going into this into and through summer. Hopefully that sticks. Anything else on your mind at the moment?
RSP versus VU. It sounds like I just made a lot of noises, but what that certain terminology means, RSP is an ETF that tracks the S&P 500 equal weight, so all 500 constituents get the same percentage weight of that index, versus the market cap S&P 500, which the larger the company, the more percentage, the higher percentage within the index. And this year has been a remarkable shift in that the equal weight S&P 500 has actually kept up and outpaced for most of the year the market cap. So in plain terms, what that means is you are finally starting to get more broad-based performance from other sectors outside of technology and the communications sector. So things like industrials, materials, even real estate's doing a little better, utilities, especially energy with the rising oil prices. We don't need to be just chasing the high-flying AI, tech, semiconductor stocks. There's a lot of value out there that goes beyond the names that we've been so familiar with over the last 4 or 5 years, and that to me continues to be a very interesting story. How about yourself?
Yeah, well, I want to add to that because that's been, I think what's important is that's been earnings growth driven, not multiple expansion driven in those sectors after multiple expansion has maybe driven some of you mentioned technology and communications. Those multiples have jumped back up now since some of the lows we've seen for the year, at least in March. The multiples in those sectors have jumped back up. The multiples in those other sectors that you mentioned, more broad-based, have not really moved as much with earnings growing. We've talked about 1Q earnings being really good. So I'm going to be excited. It's going to be a month still, but I always like earnings season. I always like to see where the numbers pan out. The expectations are really high, 20% plus year over year earnings growth. That's well above average. I was cautiously optimistic because the consumer seems to be doing okay despite higher energy prices.
Inflation's back over 4.2. You got to keep an eye on that.
Yeah. And then we talked about the Fed. We don't think they do anything now. You mentioned I'm still sitting on the fence, but if I'm looking over to the height camp at this point, and less likely that we're cutting rates. So that'll be something to keep an eye on throughout the summer as well.
Yep.
Thank you for the insights, Tom. For those watching, listening, thank you for taking the time. We really appreciate it. As always, call, email us with questions, commentary. We're happy to have a conversation. Always enjoy talking about markets. Thank you.